Ether jumps 15% to 4.9K, nuking $770 million in shorts. Fed flips dovish. Does 5K hit next, or do you blink? Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is August 24th, 2025. I am Nova.
I am Satoshi. There's this undercurrent of greed rather than fear among traders, fueled by some pretty big macro news.
Yeah, and that macro news really set the tone, didn't it? It seemed to lift all risk assets. Plus, we've got some standout crypto moves and key industry stuff to cover.
Exactly. So, where should we start? Probably the big catalyst.
Let's do it. Okay, let's unpack this. The Federal Reserve. Chair Powell's comments at Jackson Hole seemed, well, pretty dovish, hinting maybe at a rate cut, even as soon as September.
That's the core of it. That dovish tone signaled potentially easier money ahead, and the market reaction was immediate.
How immediate are we talking?
Well, investors basically started pricing in a rate cut for the mid-September meeting almost right away. The probability jumped to near 90%.
Wow.
Yeah. And that directly fueled what we call risk-on flows. Investors felt, more comfortable moving into higher-risk things.
Like Bitcoin, Ether.
Precisely. Bitcoin, Ether, other digital assets, they all got a boost from that sentiment shift.
Okay, so that sets the stage. But here's where it gets really interesting, I think. Ethereum. It's been on an absolute tear lately.
It really has.
Up around 1.7% just recently, nearing $4,800. That's so close to its all-time high. And remember that huge spike on August 22nd?
Oh, yeah, nearly 15% in just 24 hours. Pushed it up towards, what, $4,885?
Exactly. So what was behind that specific, powerful ETH rally? More than just the general Fed good vibes, right?
It's definitely. A big factor there was a massive short squeeze.
The squeeze. Explain that a bit for folks.
Sure. So you have traders betting against Ether, right, shorting it, but then the price unexpectedly shoots up, partly because of that Fed news and general buying.
And they get caught.
They're forced to buy ETH back to cover their positions and limit their losses, but all that buying just pushes the price even higher. It's like a feedback loop.
A cascade.
Yeah, exactly. And the numbers were huge. Around $770 million worth of crypto futures positions got liquidated in that volatility.
$770 million. Ouch.
Yeah. And Ether shorts were hit particularly hard. There was one report of a single trader losing a $10 million ETH short position on OKX.
Wow. Imagine that phone call.
Right. And alongside that squeeze, we also saw pretty robust buying from institutions adding fuel to the fire.
Okay, that brings us nicely to institutional flows, because it's not uniform, is it? There seems to be a bit of a divergence.
That's the key point. If you look at recent data, Bitcoin spot ETFs actually saw net outflows. Even BlackRock's big Bitcoin fund had significant single-day withdrawals.
But Ether
spot ETFs, completely different story. They saw net inflows over the same period.
Really?
Yeah, BlackRock's Ether fund, for example, pulled in over $230 million in just one day.
So what does that tell us? Just a rotation, maybe? Or something bigger?
It suggests institutions aren't just passively buying crypto anymore. They're actively strategizing. Moving between assets. And it definitely signals a strong appetite specifically for ETH right now. Maybe seeing it less as just speculation and more like a strategic long-term tech play.
Interesting. Like seeing its underlying tech value.
Could be. It shows the market maturing, how sophisticated money is thinking of this space.
Okay, shifting gears slightly away from market prices to industry structure. We had that big Ripple decision finally come through, SEC versus Ripple.
Right, that was significant. The key takeaway, XRP sales on public exchanges were deemed not securities.
That's huge for regulatory clarity, even though Ripple still had to pay a $125 million penalty. But clarity is good.
Absolutely. And speaking of big moves, Sharplink Gaming, they made a massive Ether purchase.
I saw that headline. How much are we talking?
$667.4 million worth. They bought over 143,000 ETH.
Whoa!
Yeah, brings their total Ether holdings up to around $3.2 billion. It's a major example of this accelerating corporate accumulation trend.
They're becoming like Ethereum's own MicroStrategy, as some people are calling it.
That's exactly the comparison being made. It shows real corporate conviction in ETH as a strategic reserve asset.
It really does. So putting it all together, the Fed pivot, the ETH rally, the institutional shifts, the regulatory clarity, what's the outlook? Short term seems pretty positive.
The short-term picture does look favorable, yeah. You're seeing analysts getting more confident, calling for potential new all-time highs for the majors. Ether breaking $5,000 seems within reach to many.
There's always a but, right?
Always. This raises an important point, especially for retail investors. Caution is still key.
Because?
Well, the rally has been fast. That means short-term volatility is definitely still a risk. And we know crypto prices react very, very sensitively to any signals from central banks.
So don't get over-leveraged. Manage your risk.
Exactly. Avoid chasing pumps. Manage risk carefully. The usual good advice, but especially important after a quick run-up.
Makes sense. So we've got this constructive alignment, it seems, macro, regulation, adoption trends kind of pointing in a good direction for now.
Broadly positive, yes. But, reiterate the basics. Diversification is crucial, and stay cautious. This market, as we know, can turn on a dime. Unexpected news, global shifts, anything can happen.
Absolutely. Always good to remember. Okay, so for you, our listener, here's a final thought to chew on as we wrap up. We talked about SharpLink's huge ETH buy, this corporate accumulation. Think about that, plus the potential long-term impact of things like 401k allocations eventually flowing into crypto. How might that continued influx of serious corporate and retirement capital fundamentally change the scale, maybe even the stability of this market in the years ahead? Something to ponder.
A very big question indeed.
Definitely one we'll keep watching. Thanks for tuning into The Deep Dive.
You've seen the crypto headlines. Now get the signals that impact your holdings. Money.ai scans 1.3 million signals a day, from token prices to Twitter sentiment, and gives you one personalized briefing. No hype, no noise, just your crypto edge. Download Money.ai. Stay ahead.